Good morning from the For the CME. This is Chris Robinson with your Traders Exclusives comment for today, Wednesday the 28th. We're finishing out the week, the month, and the quarter. So we could get some activity. We're going to talk today specifically about the grains and also the livestock, and then I'm going to let you go. Biggest action we've had has been the recent low as of yesterday. We made a new 5.5-month low in November soybeans. The funds are still in a precarious position. They're still long about 60,000 contracts of beans. They haven't yet thrown in the towel. We have a report Friday, a stocks report, which may be the catalyst for them to finally throw the towel in, depending on whether or not it's bullish or bearish. So I've watched that. You also have end of month evening up positions, and you have end of quarter evening up positions. So I would watch that. Soybeans led us up earlier this year. I talked about that. If you've been watching me along for the past 6 or 7 months. They've let us down here, unfortunately, on this last move. Corn and wheat continue to hold in at kind of technical levels. You've got December corn trading right around 330. The contract low you're there, you've got to watch, is 315. Chicago wheat continues to hold above $4, but there's a low down there at around 386, around 15 cents to go. The funds are still short about 180,000 contracts of corn. They're short about 120,000 contracts of wheat. So they have had no reason to have a big short covering rally. That is going to be the only thing that's probably going to pull us up here, is if we did get a situation where the funds would have to pull the ripcord on their shorts in the corn and in the wheat. So I would watch that. Friday's report. Anytime we have those reports, it gives you a good opportunity to do something, try and catch a move. You can do some good risk-reward trades. The number comes out at 11. And that trade between 11 and 11.02 is generally pretty interesting, and I would look for that for an opportunity. I'm going to switch over real quickly to livestock. We've had new lows here, new 7-year lows in the hogs. Continue to have an oversupply, a very large breeding herd. A lot of people are stepping here trying to pick a bottom. If you pick a bottom, make sure that you've got an exit strategy. Basically trying to pick a bottom, we've all heard that expression, it's trying to catch the falling knife. You look like a hero if you catch it perfectly, but on the way down there can be a lot of slippage. So don't fall in love with the idea that you're going to buy the low and catch the next move. So if you're picking a spot, make sure you've got your risk reward worked out, make sure you've got your stops there to protect you in case the market does continue to sell off. Ditto for both the cattle, live cattle and feeder cattle. A lot of volatility there. We've seen a very big downtrend in cattle in the last 8 months, and periodically we have these $15, $16, $17 rallies. Those have been good opportunities to step in and do a counter trend trade. I would continue to watch that moving forward. Supply and demand continues to be leaning heavily towards the bearish side for not only the cattle, but the hogs as well. So that's about it. If you're looking for help with your hedging, give me a holler. If you're looking for help with your speculating and want to have some good risk-reward parameters, I can work with you. It's Chris Robinson. Find me on the web. Have a great day.